Hey, it's Rav from Everyday Investor, the hottest investment show in the world. That's right, I said it. I don't care who knows it. You know, we take our time, we go to work to make money in order to provide. Let me say that again. We take our precious time, we go to work to get a paycheck so that we can eat. Nothing wrong with that. Work is good. I believe that we're created to work. But imagine a life where you could, work a little less, take your money, help it to grow its money, and then therefore you can enjoy that time with family, friends, a purpose greater than yourself. That's what Everyday Investor TV show is all about. Remember, whenever you're faced with any investment opportunity, you always want to ask 4 questions just to start. Number 1, what is the return on investment? 2, when do I get that return along with the money that I put in? 3, what is the minimum investment amount needed? And 4, you look them right into their pretty eyes and you ask them, what is the risk, the worst case scenario? I am super excited about this show. We're going to be talking about, wait for it, we'll be right back. Coming up, we talk to our good friend Peter Politis. He's teaching us all about equity investing in real estate developments.
You are owning your proportionate share and letting your money work for you, because that's really the key to investing. A lot of real estate investing is your money being invested and you along with your money working for your returns.
The mortgage world has changed. Has your advice? Are you looking for a modern approach to your mortgage planning process? Advice tailored to your unique, ever-changing circumstances? Whether you're upsizing, downsizing, purchasing, or refinancing, the Kyle Ford Mortgage team works with individuals and companies to custom tailor the right mortgage product for you. Working with a wide selection of lenders, we're here to serve our clients and help them achieve their real estate and retirement goals. Contact the Kyle Ford Mortgage team today, Canada's mortgage choice.
Hey, it's Rob. Welcome back to Everyday Investor. Before we talk to our good friend Peter Politis, we're going to find out what's happening in the world of stocks with Omar Khan. Over to you, Omar.
Thanks, Rad. Omar Khan, guys, here with Theta Trading. Just want to give you a heads up on how the market did last week. Rough week in the markets. Now, what's happening in the markets right now is all the technology names that did really, really well since COVID has really begun, they're getting sold off. People have made a lot of money selling these things off. So the market's had a pretty rough week, and they're buying, your traditional brick and mortars. They're going up. So it's called it's a sector rotation into the more defensive names. And you're seeing a lot of profit taking and selling of these tech names that's really, really propelled the market during COVID. So rough week. People are still concerned about the 10-year treasury yield. The market's still concerned. Now, what the reason for that is because they're worried about inflation. If bond yields go up, people are concerned, what's going to happen? Might get inflation. Interest rates might go up. That's not a good sign for the economy, right? Might have to slow it down. So that's the concern, and that's why you're seeing the sell-off. But we have to keep our eye on corporate earnings. If they come in nice and healthy, then hopefully we can expect the market to do well later on this year. Let's see what happens. Back over to you, Rav.
Thanks, Omar. See you next week. Peter, it's great to have you on the show with me.
It's great to be here, unfortunately not there, but nice to see you anyways.
Well, that's the sad part. Normally we're in the big studio and we get to give each other a hug and, have some lunch and see what's going on. But hey, Pete, I'll take it. I need my Politis fix. I haven't had it for a long while, and you're looking good. How are you managing to get your hair cut during these days of COVID?
It's one of those do-it-yourself moments. I try to find the online vacuum cleaner, but sold out. So we're just dealing with the old clippers at home.
I really appreciate time. Pete, can you believe it's been over a decade when we were first introduced, actually by your father, George, who's a very active investor and does a lot of work, especially in the commercial space. But can you believe it was 2011 when I did my first investment with Greybrook, but I'd known you before that even.
Yeah, when you say it like that, it's funny how much time flies. This is my 16th or 17th year doing this, and when you say it like that, it just sounds such a long time, but it only feels like 2-3 years. But it's been a great ride.
Tell us a little bit about who Greybrook is, and I'm was very flattered, many years ago that you asked me to come on board with you and do a little bit of PR work or some business development, and so that's been a fun ride. But for those that are watching, what is Greybrook Capital, Greybrook Realty Partners? What do they do? It can, a lot of people say, oh yeah, we're a realty outfit as well. But an equity firm is quite different, and you've had much success. Congratulations. Explain it a little bit for the everyday investor.
Yeah, sure. I mean, Greybrook is a real estate private equity firm, and we focus on investing in equity and real estate development. So what does that really mean? When most people think about investing in real estate, they think about doing it kind of like as a consumer, the way I put it, which is they're buying pre-construction condominiums or townhouses or homes or duplexes or fiveplexes or tenplexes or plazas. They're buying a kind of a finished product in a sense. And they're buying it for cash flow, appreciation, or some combination of the two. That's mostly what real estate investing is to most people. We look at it a bit of a different lens and do it by way of development. What does that really mean? It means that we're the producers of these inputs. So we partner with the largest developers in North America, really, and we joint venture to buy property, and we co-own land together in various places, which we'll talk about. And then we build, could be condominium developments, townhouse communities, single-family home, mixed rental buildings in major U.S. cities. And once we sell the homes, the townhomes, or build, lease up, and then sell the rental buildings, we essentially make a manufacturing margin off the building of that product, and we take our profits, and then we have nothing else to do with these developments, and off we go to the next one. And that's really the big difference between kind of like the development and the equity investing and being the consumer of these goods.
And what I love about it, Pete, is that Greybrook is the one that is in partnership with these developers, and Rav and friends get to come in and get the same opportunities that the big boys would do, but I simply put my money in there to invest. I don't have to, unless I want to. I don't need to put on a hard hat or grab a hammer or anything like that.
Listen, I've seen you put a hard hat on and grab a hammer, and I think for the good of the developments, we're going to keep you far, far away from that. But I think that that's what most people, I don't want to say don't do correctly or don't calculate necessarily, is they always think of their time as free. And I'm like the complete opposite. I value every moment of my time at extremely high cost. So when I'm buying something, at some point, I'm to a certain extent buying a job, whether that means I'm dealing with tenants or doing repairs or other stuff. And what we focus on is whether you have $20 million to invest in one of our developments or $25,000 to invest, you are owning your proportionate share and letting your money work for you, because that's really the key to investing. A lot of real estate investing is your money being invested and you along with your money working for your returns. And we focus it on it being your money working for you. So while we're happy to have you come on board and provide a helping hand, that's really not what our platform is about. Our platform is just like real estate, getting to pick the specific asset we buy. So the development, the location, the development partner, the product, all that stuff, but letting your money work for you on projects that have the largest economies of scale, that are hundreds, in some cases over $1 billion total projects, but without having to worry about investing tens and tens of millions of dollars.
No, I love it. I love it. And I love the word manufacturing, because really that's what we're doing. I mean, it happens to be housing because, again, Mama always told me that when you have more demand than supply, we're in business. So housing is a good thing to be involved in. But really, we're creating a widget, and Rav and friends get to put in a few dollars and then split the profits with the developer. And then I've got people like Peter and team that are taking care of all the, overseeing it all and making sure that everything is, going the way that we expect. Pete, here we are in, the early months of 2021, a year of COVID. What did Greybrook do in 2020? I mean, did we just stop and, binge on Netflix, or were we active?
Yeah, I mean, I might be the only person who didn't get through a single Netflix series during 2020 because we were so busy we didn't have the time. The interesting thing is because we buy stuff on a project by project basis, we're not obligated to be out there being active, but we really have two sides of our business. We have the new stuff that we buy, but we co-manage and co-develop all these properties with our development partners and oversee them on behalf of the developers. So While we probably only bought about $120 million worth of new development land in 2020, on an average year, we would do probably $400 to $750 million of new land development acquisitions. We focused a lot on our active projects. I mean, we've been involved in over 80 developments since we started. We have 60 plus almost that are active today. And in 2020, we focused on moving these things along in the process because while there was some uncertainty, the real estate market in terms of demand, both for sale and for rent in our major US cities, was really hot. So across our portfolio, we sold almost $1.3 billion of homes and townhouses and condominiums in 2020. We delivered over 900 residential units in 2020, and we returned over $75 million of closed out and finished developments back to our investors in 2020. So it was really a time where we focused on moving a lot of our product that we had that was available for sale, getting into construction and finishing construction with all the starts and stops what we already had on the go. So probably one of our busiest years ever, with the lion's share of the focus being on our current active portfolio.
Well, not the full 75 million, but I thank you because yours truly was a recipient of some of the returns in 2020, Pete. And no, it's fantastic. And you know, people sometimes just surf the MLS and, oh, here's a great deal, Rav. Do you want to invest in it? That's not what Peter Politis and crew does. I mean, you are actively looking at, well, let me ask you, how many different opportunities come to you from developers across North America? And then how many after your team has underwrote it that we actually transact on average?
Yeah, I mean, we really get deal flow opportunity from two different places. One, we have 15 or 20 of the biggest development partners in North America that essentially bring to us everything that they look at. And either it makes sense for us to partner with them or not. But over the last 15 or 20 years, we've created some of the deepest relationships as being one of the largest acquirers of land, development land in North America, that whether it's brokers or off-market stuff or bankers or family offices who have people that own property, we get inundated with deal flow. And in a given year, we can literally look at 200 or 250 legitimate opportunities. And in an average year, we'll buy 8 to 14 of those, right? So, and size and scale can vary. Sometimes you're buying a piece of land for $100 million that makes business sense. Sometimes you're buying something for $10 or $20 million, a piece of land that makes business sense. So it's all about relative scale, but the ability to see so many things is something that's very unique to us.
Yeah, I mean, Pete, I've been doing the show 17 years. Can you believe it? 17 years.
You started when you were 6 years old, Rav.
That's right. That's right.
Ripe old 23 today.
2005 January. So therefore, I know so many brokers and realtors and broker owners, and they're always, I don't even tell you, they're always sending me stuff. Can you send this to Peter? Can you send this to Peter? And I always say, guys, Peter's seen this. Believe me, if you're sending it to me, Peter's seen it, because most of our opportunities are not even on the MLS. I mean, you're getting these direct off market. Yeah.
None of them are on an MLS system. We've never bought anything off the MLS, actually.
Well, there you go.
I think that what people don't really understand is the key to, especially in development, to being successful is you don't want to get the stuff that's been picked over by other people. And I'm not saying that that's not where some people get their deal flow, because that's fine and that's reasonable. But we want to be the first line of option for every good whether it's a broker or a landowner or a contact, or if not us, then our development partners in our ecosystem. And we kind of want to have first crack at everything. And usually, if we haven't seen it or passed on it, it's probably not very good, generally speaking. That doesn't mean we get every deal or we see every deal, but we see so much at such a high level, and with our eyeballs very often being one of the first, if not the first to see it, that we kind of get our pick of the litter. And then, not saying that all fits for us, but usually these deals find a home. Someone else thinks they make sense of it or they want it. And there's things that we've passed up that other people have bought and done very well on. But, we have a lot of access to opportunity. I think that's one of the key things that differentiates us from a lot of organizations.
Listen, Pete, love having you here on the show with me. Let's take a quick break. When we come back, we'll look at what is in store for 2021, how investors can get involved. Thanks for watching Everyday Investor. We're talking to my good friend Peter Politis, CEO of Greybrook Realty Partners. He's teaching us all about equity investing in real estate developments. Don't go anywhere. We'll be right back.
At Theta Training, our goal is to help you achieve financial freedom by teaching you the foundations of trading stock options. Join our growing community. Learn through our live-streamed weekend course, or develop your skills at your own pace online. Understand how the stock market works and how you can use the options market to earn additional income. Achieve financial freedom and live life on your terms. Let us help you build your empire.
Hey, it's Rav. Welcome back to Everyday Investor. I'm with my good friend Peter Politis. Always learning, always learn tons from him. Before we get back to Peter, let's go and see what's happening in the world of mortgages with our mortgage expert, Kyle Ford.
Thanks, Rav. This week I want to talk about rental offsets. Many investors think that banks only use 50% rental income. Though this is true in a lot of cases, a lot of lenders have shifted to a rental worksheet model. The rental worksheet allows you to use 100% of the rental income minus vacancy, property management, repair and maintenance, as well as the expenses such as principal and interest, taxes, and heat. If you're buying properties that are break even just on principal, interest, taxes, and heat, there's a good chance you're not going to qualify for as much financing. However, if you're running proper cash flow calculations that include vacancy, property management, and repairs and maintenance, and your property is still producing a positive surplus cash flow every month, you're going to be able to qualify for more financing and more investment properties down the road. Work with your accountants, lawyers, and mortgage brokers to structure your financing in the best way to allow you to qualify for the most financing. Thanks, and back to you, Rav.
Thanks, Kyle. We'll chat with you next week. Peter, we were talking about all the things that were happening in 2020, a very busy year, if not one of the busiest with Greybrook. What is happening 2021? But even before you answer that, talk to us as investors about potential projected returns and timelines and minimum investment amounts. Walk us through that.
Yeah, I mean, our goal is really to double our money for our investors every 5 years. So if somebody invests $100, we hope that they get their $100 back plus $100 in profit over the 5 years. But because development doesn't really allow for, let's say, ongoing cash flow because we're building, we have raw land and we're building stuff, all of our payments typically come at the end of the development cycle. And now developments can be different. They can be 3 years in length, 5 years in length, 7 years in length, 8 years, depending on size, houses, and whatnot. But, obviously, if it's done in 3 years, maybe we're making a 60% ROI. So kind of like a simple 20% return that we're looking to get. And then people get to choose the developer, the location, the time horizon that they're invested in. And from a minimum investment standpoint, while we're a registrant of the Securities and Exchange Commission in all provinces of Canada, our minimum investments are $25,000. And anything above that, of course, you have to qualify in order to be suitable for investing in that amount of money or above. But those are our minimum investments. And our goal is really to create a diversified portfolio of different kinds of developments, high-rise, low-rise, multifamily in major U.S. cities, those things. So people have, it's kind of like you don't buy one stock, you want a portfolio of it. And that's what we do. We create those for people.
And I don't know if you mentioned it while I was writing, but a lot of these opportunities, we can use registered funds, yeah?
Yeah, most of them are RSP, TFSA, RESP eligible. They're tax efficient within corporations because it's not considered passive income like a lot of real estate income is. So there's really a lot of different ways to invest. And of course, you got to talk to your own tax professionals. But as an organization that has over 7,000 active investors in 32 countries, we've seen a thing or two.
And also, Pete, I mean, why Greybrook is so great is because we dot our I's and cross our T's. And so, there's privacy issues in terms of who those investors are. But, I've heard some could be professional athletes, somebody could be a mayor of a prominent city, somebody could be, just the local school teacher. And so we have a vast array of different types of investors.
Yeah, I mean, the key thing is that whether you invest millions of dollars or $25,000, everyone gets treated the same way and they get the same returns. And, my parents who invest in all these deals get the same returns as anybody else. And we're a large organization that has all the standard, securities and privacy requirements. I mean, we have over $17 billion in development and we're 70 people strong just here in Toronto. And we have offices in Israel. We have an office in Vancouver. We're building an office out in Miami that'll be ready at the end of the year. So, we're a robust organization. I know today, you see Peter and you think Peter is, while he's there, there's an army of very smart people behind me every day that work. And that's what we talk about a lot about the things that we're excited to do going forward. And in 2021, we have a lot going on. I mean, we have 8 or 9 different developments that are going to sales. We've projected over $300 million of distributions between capital and profit returns back to our investors. And we're really focusing on 3 areas of investments in 2021. We think there's an opportunity to buy certain high-rise land in various areas around the downtown area and in the periphery of downtown. That's going to be a big focus for us. Certain low-rise communities, so ground-related housing, kind of like in the East End and the West End and the north of the city, where we're buying land that, maybe a little bit longer term away from development, and we'll be building homes and townhouses on there. And a big focus for us that has been a real big part of our business and our growth over the last few years is we call it our Society Living brand, which is buying land and building rental apartment buildings from scratch in major U.S. cities. So we have developments in Miami and in Fort Lauderdale, and we have stuff, our partner has stuff in Phoenix and Orlando and in California and in Chicago and in Denver. We're looking at stuff in Atlanta and Charlotte. It's essentially brand new rental buildings at kind of like the main corners of these major cities. But we're doing it where there's smaller format units with a co-living aspect to it, about 20 or 30% of the building. And it's technology based, it's social living, and we're basically creating a whole living experience within a building with highly amenitized spaces, typically 50 to 75,000 square feet of amenities, and the ability to essentially live for the lowest total dollars in the most highly amenitized building in the best locations in the cities and major U.S. cities.
No, I mean, it's fantastic. When I learned about that concept, I mean, I grew up in Kingston, moved to Toronto, lived in and around the Ryerson area, lived in residence there, even though I didn't go to school there, I just pretended. And so, we would have common areas and we'd have our own little, bedroom, definitely didn't have our own washroom. When I heard about society and I heard about, the demographics, and correct me if I'm wrong, but anywhere from early 20s to, up to even 40 or more, where people are, kind of living like what I just mentioned, but 100x, like it's on steroids, where they have their own workspaces and swimming pool and yoga studio and fitness center and a bar, restaurant.
We really create, like we thought when we first started the concept, we thought it was going to be kind of like the 18 to 35 demographic. And while we're very strong with that demographic, the number of people that are 35 to 65 that live in these buildings are something that's probably of a surprise to us. In the US specifically, people move around a lot, and home ownership isn't like we think of it here in Toronto. Like one of my friends goes and moves from Toronto to Montreal. Oh my God, I can't believe that happened. They're gone forever. It's like you never see them again. Moving around, like, I speak to people who live in these buildings and say, oh, I went to school in Miami and then I got a job in Atlanta. Then I moved to Denver and I went to Chicago and I got a job back here and I'm in Fort Lauderdale. And these are highly amenitized buildings where we think you don't need a gym membership anymore. We have co-working spaces. You have pools and you have gyms and you have movie nights and you have cooking classes and whiskey tasting, and it's technology-driven apps that, whether it's entering your rooms, and while you can rent the room in a bedroom and you have a common area and there's roommate matching systems, they're kind of smaller format units where you live inside and outside of your unit.
I think it's fantastic. So this year and forward, we're looking high-rise land for condominiums. We're looking at low-rise land, whether we're building a master plan or a subdivision or even just 100 townhouses. But we're focusing a lot on society living. You're working with an outfit, Property Markets Group in South Florida. They've built up New York, Chicago, Florida. You're partnered with them. Pete, describe kind of how it works. So How does this come to fruition from beginning to end? Society Living. Are we taking an existing dwelling? Are we buying the vacant land? Talk to us a little bit about how it works.
Yeah, I mean, Society Living works like our high-rise and our low-rise opportunities, really. We and our development partners, in the case of Society, it's PMG Property Markets Group, that's our national partner. We go out and we source opportunities. What those opportunities are is essentially developable pieces of lands in major U.S. cities. And again, our focuses today are in Miami, Fort Lauderdale, Denver, Austin, Atlanta, Charlotte, Nashville. Like those are kind of our core cities. And then we make sure that the zoning is existing there to build the kind of size of building that we want. And then we go out, we invest equity, we buy the property, we get a construction loan, we build the rental developments, we lease them, in this case, as opposed to pre-sell them like their homes or townhouses in the GTA. And then when we're fully leased up, we sell it to an institution, a REIT, a family office, a sovereign wealth fund, whomever, and they buy it for income. And we make the margin of the revenue that we sell it for versus the cost that it costs us to build it. And that's really the key. As manufacturers, we're out there to make a manufacturing margins, whether I'm selling a condo or a home and I'm delivering it to an individual user, or I'm building a big building, leasing it up and selling a fully leased rental building to these large institutions. We have an exit strategy and a terminal end to our projects. And I think that's a big thing about investing generally. It's if I'm buying real estate, when do I sell? How do I sell? Should I sell? I'm buying a stock. You and I can buy the same stock and you make a pile of money and I lose my shirt just based on when we sold something, right? There's no buy or sell decisions here. Really, once we've done and delivered the product, we finished, we've made our money, and we have nothing to do with these projects. Each project finishes and we move on.
And is this the same thing, looking at the projected returns of around 20% annualized?
Yeah, that's what our target returns are for these developments as well. And again, these are also RSP eligible on other vehicles. And you don't have to, if you're a Canadian, you're worried about having to file taxes in the US, we have structures that don't allow for you to have to do that. And we've made it very easy and turnkey for people. I mean, we're a full service shop that manages all this stuff, not just the developments, but the whole transaction process of somebody making these investments and being invested in this throughout the term of the developments.
And I have the option to use Canadian money to do this.
Correct.
Okay. Yeah, no, it's a very, very cool concept. And I've heard you say probably not going to happen in the GTA only because of how much land something like this takes. Is that right?
I mean, it's not so much about how much land it takes. There's a lot of restrictions around building and amenity spaces and other issues that would make it a little more challenging because of how much area it takes and how expensive land is in Toronto. It's very hard to make financial sense of 70,000 square feet. Like we have buildings that we build that have 70,000 square feet of amenity spaces. In Toronto, a building of the same size would have 7,000 square feet of amenity spaces. So to give you an idea of scale, we're probably 10 times the amenitized space, and creating these social living, these buildings, these living, breathing organisms that have events and movie nights and battle of the bands and you name it, and different like gyms the size of Equinoxes. You couldn't do that very easily and financially in specifically in the core of Toronto. But it's more doable because of the more looser restrictions of building in the US for sure.
Pete, love having you on the show. It's too bad that 30 minutes flies by. Thank you for doing this. I really appreciate your wealth of knowledge and just your expertise. And I'm very grateful that Greybrook came into my life 10 years ago.
The feeling's mutual. I can't believe we already blew through 30 minutes. I'd love to come back one time and talk more.
Of course. Much love to Sophia and little Maddie. He's doing good. He's what, a year and a half now?
15 months old, running around. He's the best.
Yeah, I'm sure he is, Pete. Thank you so much for being on the show. And thank you guys for watching. Without you, we would not have a show. We'll see you next week. Same place, same time. Honey, I love you. I'll be home soon. Thanks for watching, everyone.